Good, good evening, YouTube. Today we had a red day. We're not used to red days, y'all. We are not used to these red days. We are ready to sell on the red days and we're going to buy on the green. Buy high, sell low, right? Absolutely not. We buy the fear every single time. Every single time, y'all. Okay, so today there was at the Capitol Hill, there were talks of regulations. Stock slide because of regulations on social media. We're not talking about Microsoft. We're not talking about Apple, Amazon, all the people who fell square. It's directly related to Facebook, to Twitter, and even Google. It was bad that Google did not come to the Capitol Hill because there was a article recently about how some of their ads were actually fake news, and then also just a lot of talk on Facebook's fake accounts and Twitter's fake accounts, and how it is out of their control sometimes to like filter out what's real and what's fake. So I can't believe social media triggered a 1% drop, over 1% drop in the NASDAQ. But let's get right into these charts. All right. So on the QQQ, the NASDAQ, the one that got hit the hardest, is still in an upward channel. Still in the upward channel. Right here on the EMA, the 20 EMA day, the smart money was buying right there every single time they buy the fear. Sure, we do have a high sell volume day over the moving average. Yes. However, let's get a deeper look at the selling. The selling declined. It was a let's scare everybody about the Capitol Hill talk and let's buy it up because it closed with at least a bullish wick. It could have been larger. However, it was still clear that people bought off of this. Let's get over there to February. I guess everyone forgot about February. Everyone's forgetting about February because we've had a 1% drop. All right, guys. So in February, 10% drop. Over 1, 2, 3, 4, 5, 6, 7, like over 10 days, 10% drop. Everybody was selling, selling, selling. I gotta get out of here. You can tell that there was high buying and high selling just all over the place. Institutions were going crazy, shaking out the weak. Please, please, please get out. And we have to pour one up for the person who sold at the bottom, and we are now at a 21%. At the peak, a 22% increase. On these red days, they are shaking out the weak every single time. That is huge, guys. Let go of the emotion to this money in the market. And if it were to be cheaper, you have cash outside of the stock market. Keep buying average down because the whole game is buy low, sell high. So that's the QQQ for you guys. We do have the MACD trying to go into a sell signal right here. We have the RSI on a sharp decline. But let's look at what happened. So we have that decline, that same decline. No, obviously this one's better. In June, we have that decline the same, bounced up. This right here was much worse than what it is right now. We had a consolidation on the bottom trend line. We're not even close to the bottom trend line, and we actually used the 20-day EMA as support today. This was where a lot of people were loading up. The smart money was loading up. Sold the peak, bought again. This smart money did they are destined. They have to get in at the best possible entry to keep this bull market on going. We'll have trade talk. We'll have tariff talk. We'll have all this different stuff. They want to just continue to just make money off of the retail. It is clear. there's no reason to have tariff talk. There's no reason to have different things. Obviously, this social media stuff is very important. But the Capitol Hill, when was social media that important to involve a government, federal employees, government, all that stuff? It's pretty crazy. Let's go over to the SPY. SPY is the S&P 500 index. Had broke out of the channel. Didn't know what it was doing. This was extreme exuberance, extreme euphoria. That's where you have to be scared actually. So when the prices are going up, you should be a fearful bull. When the prices are going down, you should be happy because you have the cash and the capital to maximize those gains, guys. Again, February, a 10% drop. Today, from the peak, you can't even draw it. 1% drop, and we are scared, guys. We gotta do better. We gotta do better, y'all. So I do see that the S&P or the SPY does not like to be outside of this upward trend line to break out above it. 1, 2, 3, rejection. Another rejection. So I do believe going forward, we're going to probably have better performance when we stay and maintain this magnet to this upper trend line. Our MACD's falling, bearish divergence, RSI falling, all because you do have those red days. Now the Dow. I actually charted a lot of Dow companies prior to this crash, and a lot of the charts were bearish. A lot of them were. However, they went hard today. The Dow held it down on a green day. So, in my beliefs, the big companies, the ones that's been around for hundreds of years, they know that they are safe. They're safe havens, and when there's like crazy times in the market. Right now, I'm chasing high performers. You know those high performers are going to go be bad on these red days. But when they're green, they're green. When you're investing in these Dow companies, you're not going to get crazy amounts of returns, but you will be safe. I'm just going to say it at that. You will be safe. So some of the stocks I follow, I'm a younger investor, so I do like that risk. So I'm okay with losing all my money tomorrow. Because, again, money isn't anything to us. We shouldn't even be emotionally tied to this money, because once we've entered it into the market, we've mentally said that we have lost it all. Okay, so this might be an epic MACD fake out. I talk about this a lot in the chat, the group chat that I'm in, and also just in my TA. It is so close to being a sell signal, so close. But if tomorrow we have a green day, tomorrow we have this RSI curl up, it's going to be on a bullish track to get back into closer to the higher trend line up. It's kind of like a rising wedge, if you can tell. It's kind of coming closer and closer to this end point where you'll finally probably even get a breakout. I would like to see a new all-time high by October if the bull market continues, but the Dow really held it down. I'm going to talk about Facebook. I'm sorry, I know a lot of people are long on Facebook. I mean, I know it's something you know. I know that the FANG, well, the FANG, I mean, it's got to be the safe haven. It's got to be the best portfolio out there. Absolutely wrong. The FANG, I think, was designed to get those retail investors and not crush them, but eventually pull the rug. Eventually. I mean, you can only go up for so long. This is when I knew that I couldn't touch Facebook, because I was just now kind of getting into the market and was very engulfed in all the news. And I remember the day where it was 217. It was a high of 218 and gapped down. Y'all, this is not funny, y'all, but I'm laughing. What? A gap down of 19%. But the bulls, the longs, they saw this as a great buying opportunity. Y'all, I'm not mad at y'all. I'm not mad at y'all. Some of y'all bought at 166. But as soon as it hit its point, its highest point, guess what we call that highest point? Its resistance. Bam. What happened, y'all? Let's look at that percentage. 10% drop after a 19% drop. Oh, Lord. That money gone. That money is gone. Don't even think about it no more. You invested it. You invested it for it to possibly win, possibly lose. Let's look at that. Let's look at that volume. That volume is high, y'all. That volume is high over the moving averages. 2 back-to-back red days. You have an increase. So it popped up. It was already a red day. Popped up over moving average. 2 days of consistent selling. We did have a support. I don't know when that happened. I did draw it. It was at like 170-ish. It really should have been like around 169, but even 169 wasn't a good support. We're at 167 right now. I just, you can't really chase a stock that has gapped down 20%, then gapped down as soon as it hit resistance another 10%, y'all. You just can't do it, y'all. You don't want to lose your money in this market. And when you have something clear as gaps down, like avalanches, you just don't want to do it. I do want to say, definitely apologize for my MDB holders, my MDB call holders. Definitely said that would have been a good entry. The earnings report, y'all, they beat on earnings. They have 61% a year-over-year revenue growth. What? And we're talking about that's bearish, or that is means for a dump. So you really, when people are selling when they have good news like that, they are the traders of the market. But if you're long on this, so it did have an old upward trend line. Then I created a new upward trend line because it was easy to see that it was getting tested a lot. So I had to draw a new line on that. It's still well above moving average. 68 would have been the lowest point. And I actually think that it hit that price in after hours. But guess what? Every time the EMA gets tapped, people are buying. So it did hit this after hours, low volume, low liquidity. Some people are selling based off of just everything. They're just selling off of emotion, not really thinking about the long term. And just on a chart, you have your red days, you have your green days. Sometimes it's going to be red days, and sometimes you got to have that capital to average down on certain things. I would like to see, because it did break out, because I did draw this over the weekend, and I broke above this, I don't even know a downward trend line from the peak, because it did try and break out of the channel. However, I do believe that it'll be fine. It'll definitely be fine. It's in a very tight upward trend line. A price that I'd be worried about is if it just did not maintain above $70. However, I do believe that we'll get a green day by Friday. Well, thank y'all for tuning in. I'm going to see if you all have any questions in the comments section. Do y'all want anything charted? Anything? Just looking to see if anybody has any say. I'm going to give you all about 20, 30 more seconds to type in some stocks that you want charted. Sorry about that, guys. Just gonna wait and see if anybody has interest in a stock to get charted. But yeah, guys, I'm not worried about this at all. Like, let's just take a minute to see. It started basically in February. Since February, it was at what 186, 190, and has been on a bullish move. It has been bullish. It's not even in consolidation mode. If anything, with all this talk, I would say accumulation zone or would maybe happen, and that would honestly be the happiest. I'd be very happy with a consolidation phase because once you get a consolidation phase, you got just equal buying, equal selling, all that. But again, I do not see this bull market being anywhere near close to losing its sting. I do not see it coming close. Just keep your head straight, your head on a swivel. We do have to still look at the EMAs, the SMAs, the RSI, MACD. Keep looking at those charts to see what's really going on. However, still above, still above, and then let's look at DIA, still above the moving averages. Thank y'all for tuning in, and I'll see y'all later.